Hey Scott, how are you? Hey Steve,
Good.
what's shaking over there in California land?
Was an earthquake yesterday morning, or yeah, but not much. We're back. Happy Monday.
Good, yes, literally shaking in those parts. Glad it wasn't too severe.
Yeah.
Yes, indeed. Hello to everyone out there and happy Monday to everybody. Today is the last day of January. It's already in the books. Wow. Seems like we haven't been here in a while because I think this is only the second office hours due to the scheduling and the one-off and the holiday for the market. But here we are, one to go on the last day of January. So welcome everyone. Before we get rolling here, just a quick moment to go over the disclaimer. We're all big boys and girls here and just want to make sure everybody in attendance is aware of the fact that all the info that we share with you in this webinar or any of the other ones that we have coming at you on a weekly basis is for educational purposes only, simply meaning we are not soliciting buy or sell information. If you do need buy and sell information or advice, I should say, please do yourself a favor, seek out a registered investment advisor or someone like a Series 7 licensed stockbroker that's legally allowed to give you buy and sell information. Once again, everything that we share with you guys in these webinars is for educational purposes only. Before we get rolling here, I always like to take a little bit of time at the top of the hour, especially for the new folks, to let you know about the community that we've built around Trade Ideas Pro. And of course, everybody knows who Barry is. He's the moderator of our trading room. Barry does a fantastic job at showcasing the way he uses the tech and loves to answer questions once it dies down a little bit. So it's a great place, whether you're a new trader, intermediate, or advanced, people from all walks of the business in there. And second best thing other than Barry about the trading room is the price. It's free. So get in there and utilize that resource if you have not been doing so so far. Of course, every other Monday you get myself and Steve for office hours. Every other Tuesday now, you're going to get Steve on the steering wheel with Andy Linlaw for the trade of the week. Every other Monday, same old, the Q&A demo with Dan Merkin, our CEO and founder, along with Brad Williams, always entertaining with those two, typically talking about new tech, or new features, I should say, coming down the pipeline. And every other Thursday, you're going to get Andy's Trading Studio, and I ride shotgun with Andy every other Thursday. And of course, every Monday through Friday, our ongoing daily support session from 12 p.m. to 1 p.m. Eastern. That is located on our YouTube channel. Next slide is going to show you how to get there. So trade-ideas.com/live. That is static, so once you get there, you can just bookmark it for easy access. But that's how you get to the live support session. It's a great venue to get any question that you might have about TI answered in real time. And we've got a different trader/trainer personality in there Monday through Friday hosting the session. In addition to that, another great educational resource that we have, and this one is also pre-recorded or it's just recorded on our YouTube channel. You can watch these at your leisure. The TI University series 101 through 401. 101 and 201 will really help you get over the learning curve if you're a new user, get you through all the basic functionality and navigation. 301, 401, we save that for the more advanced parts, the back testing, all that good stuff. But the good part is you can stop and start these at your leisure. Just cruise on over to the Trade Ideas YouTube channel, type in TI University, and you'll be able to pull these guys right up. All right, and here we are for today's agenda. Gonna let Steve take it in just a second here, talk about the overall market, that nice little push that we had today. Getting a little relief from that lower region that we were hanging out in. The compare counts really kind of knocked it out of the park today. Classic setup from those guys for my larger cap compare count window, and we'll review what those settings were after the first 15 minutes. We're also going to skip around here and talk about the sectors and the compare counts that are attached to those as well, and how they were in perfect sync with the larger cap CC readings today and made for some pretty good signals in the individual sectors as well. We are going to do the Holly recap. Of course, those of you who have been paying attention noticed that Holly didn't have that good of a day today, and we'll talk a little bit about that um, once Steve kind of gets the larger ETFs up, predominantly the SPY. There's probably a pretty good reason for that. She has been on quite a run as of late, but we broke out of that little shelf today, which could account for the reason that she was all short when the market was trending up. We'll give it a little look here in just a second. We're also going to revisit the previous day's Rippers list up here. That thing's been spitting out some just spectacular plays, both to the upside and the downside, all from just doing a little pre-screening and compiling that list at the end of the day, giving us a lot of things that were in motion the day before that we're pretty much going to stay in motion the next day, maybe even 2-3 days out. So we're going to revisit that technique and show you some of the things that came through there today as well. So having said that, Steve, if you're ready, we'll take a look at the overall market action today. You ready for the baton there, Steve? I'll kick it over to you. All right.
All right, welcome to my desktop here. As Jamie said, yes, we will start with the S&P 500, as I always do. And just want to reference what a difficult month it has been technically. A lot of downward momentum day after day, but I think Jamie alluded to it. I'm going to zoom in just a little bit. Even more so was last week, a very defined range there. Okay, so let me erase that so we can look at it a little closer. Today, I was watching one thing and one thing only. This is what we had on Friday, and I said, whoa, here we are. This is the big show. The 200-day moving average literally had been rejected a few times last week. We know the 10 SMA has been holding down the price, as it usually does when things are in motion. So we had a double crossroads here. We had that and we had that. I said, Monday is really going to be telling. And what we got was a major pass of the test. The bulls sent a giant shot across the bow of those that were sitting short down here, saying, you guys are waiting for a break lower out of this congestion. Well, nope, didn't happen. Most importantly, it could have easily popped up and then wicked right back down. I kept thinking, well, there's still a possibility for a midday reversal, which would show up as one of those nasty wicks that blow back down through, but not to be had. They even tried here at the close. So very solid day. The volume was good. First, like I said, first shot back across the bow of the bears. Now, you know, we got to remind ourselves that we technically had a correction. We literally had a correction. When was the last time we broke that 200 moving average? We haven't. It's been a while. So the bears might have got a little greedy on the downside, and what we've got is one of those big reversal, fear of missing out bounces that everybody's been conditioned to do over the last months and couple of years. And so big positive day, very positive technical day today for the SPYs to break through both of those technical hurdles and close with definitive action on highs. Let's do this. Let's look at the Qs first so I can show you how I set this. Same thing over here, was dominated by the 10-period moving average, broke support and closed multiple days below the 200-day average. But the NASDAQ, was the weakest on the way down. I think it had the biggest of all the corrections. That was over 60 points there. Yeah, that was about maybe 15% correction there. That's worthwhile, 15% correction. So today, same as the S&P, blasted back through the first hurdle of that declining SMA, saying, okay, well, maybe the momentum has broken to the downside, definitively broke out of this range from last week. We have kind of the same thing coming up here in the NASDAQ, but I'm not going to make any predictions. That's the next hurdle coming up for the NASDAQ. Now, I want to go back to the SPY because I want to redraw it for you on my other chart, as I will do here. We're going to do an anchored VWAP. We're going to see what the VWAP price is on the daily chart going all the way back to the prior high. The highest day of SPY was that day right there. So we'll come to our tool, scroll down to the anchor like Popeye, and we'll click right on that top candle, even though it's red, and that gives us a calculation. And look at where the day ended. So there's another little invisible hurdle in there for people who like to use the anchored VWAP on the S&P. So we did close right at that level today. Just out of curiosity, let's see what that anchored VWAP looks like on the NASDAQ. So we'll drawing tool, anchor. We could use that high, but I don't know what that's going to show. We're going to use another one as well. It's going to be this high back here. And so, there's a couple of waypoints that could be interesting, not to be confused with the moving averages that I'm using over here, just a different way to kind of get perspective on things. And lastly, before I give it back to Jamie, the IWM, which really had been sucking the most of all of them, has been in a downtrend for a while. We got 244 down to 180, so that was 60 into 240. That was about a 25% correction there in IWM. Maybe that's it. I was watching this one intently today to see if the moving average would catch it, and it didn't. So this could have very well been a significant enough correction, a good, nice tub soaking correction to get all the grime off that market that had been accumulating with little simple, sponge baths and sink baths here and there pullbacks. This was a pretty good pullback when you do put it in perspective. So it could be the beginning of a multi-day move on some things. We will talk more about that maybe tomorrow. If you guys are around to tomorrow for my Wednesday session, this was the pro gap scan I created, and the market was basically nothing but pro gaps all day long, and they were just spitting out winners like crazy. And so I'm going to talk a little bit tomorrow as well as maybe next week about how to use our new racing, which is not up there, our new racing feature along with this pro gap. So when the bell rings, you're immediately watching the race cars and you're going to see the top 5 performers that are not gapping and crapping, they're gapping and going. So a little bit of a tease there for some content Wednesday at noon, and next Tuesday we'll talk about that as well. So that's all I've got. Jamie, whatever you want to talk about. Yeah,
Yeah,
thank you. You're right, Dave. Yeah.
very good. Yes, and yeah, interesting take on the races there. I think is the races haven't been out that long, the stock races, and we're all just trying to wrap our head around the races and see what kind of new ideas that we can come up with. So everybody's been coming up with some interesting stuff. So yeah, races are going to be fun to deal with. All right, let me grab it here. All right, you should have eyes back on my screen.
Mm-hmm.
Good. Okay.
Yep.
All righty. So compare count readings. What did my large cap compare count window look like today after the first 15 minutes? And here's a peek at it right here. All right. For those of you who attend on the regulars know that typically I like to see a bias, whether it's to the upside or the downside, one way or the other, above 60% before I really start getting interested. Of course, market conditions and where we are in the in the daily chart are always going to play a hand there, but this can give us a peek as to how much oomph is really behind a potential move. Because what this window is doing is simply looking at anything capitalized over $4 billion, hitting highs and lows in that opening 15 minutes. So in essence, it is what it could best be described as a customized tick or breadth, right? And that's the cool part of the compare count window is it allows us to create customized versions of what we think it's important to keep count of. So that was definitely a good sign after the first 15 minutes for the bulls on where we might go. Now, what does SPY look like during that period? Okay, the pinkish area right here is pre-market, so it's going to leave that up here. The orange arrow is right at the 15-minute mark on the SPY. All right, so we opened up pretty flat over here, but man, seeing that very positive compare count was certainly a good tell this morning on the action that might take place. So plenty of time to react after that orange arrow in the first 15 minutes before we saw the SPY just march steadily higher all day. Now, in relation to that, what we're going to talk about here in a moment, we're going to talk about Holly. Of course, there's not a whole lot to discuss there, but we're going to apply the same type of logic to the sector map that I'm going to show you guys here in a moment with the attached compare counts and how anything there showing a 60% bias to the upside or better, how it did as well. And we're going to take a look at all the symbols that met that criteria here. So before we move on to that, let's go ahead and get Holly out of the way. Now, Holly had a red day today, kind of batting zero. We can see what she was trying to do here. Just 5 short trades. No big shocker that they all pretty much lost today. 4 of them got stopped out. The only one that didn't get stopped out is still a loser, just not losing as much as all the others. Of course, the reason you're seeing the $100 stop outs here is because that's what I have my AI trade sizing uh, configured to. And in case anybody is wondering, if you want to set that up, you go Tools, Options, we go to AI trade size, and you can see right here, I've got mine risk based on stop loss value set at 100. And that's why we're seeing all the stop out values at 100. And then the system will size you up accordingly based on each individual stop loss for each trade that comes out. So if anybody was wondering what the numbers are reflecting there, that's what they are. So why did Holly try to go short only today? Well, Holly has been on quite a tear as of late, the past 4 weeks, even longer. Uh, it's been performing very, very well. Of course, today is a losing day, and this pretty much tells the story right here. Had we not gotten above this level here, as Steve was illustrating earlier, we would have stayed in this range down here. We would have probably had more of the same performance that Holly has been spitting out as of late. But all the back test was, using these days, okay, and the days leading to this little basing pattern that we had here. But then boom, we broke out, we reclaimed that 200 period moving average. And so everything was, all bets were off as far as, everything that had been back tested in this range here. So, these days are going to happen. She's on a good run. Losing days are going to occur, and this is one of them. Pretty much we kind of know the answer here with the break above the 200 and the strong close that we had today. So that is pretty much what happened with Holly today. Nothing really to go over because there's certainly no spread between conservative and moderate profit. There was no opportunities to add on because all the trades were losers. And there were no trade arounds. Typically a trade around would be something that got stopped out that ended up finishing better than where it got stopped out, but not the case with any of these 4 stop outs today. So before we cruise on to the next topic, does anybody have any questions about the AI, or does what I just described there make pretty good sense to everybody? I'll just get a little sip of water here while I wait. All right, looks like everybody is on the same page there with the Holly recap, so we will just move along now. All right, I see your question popping in there, Deb. Is the stop price displayed in the Holly? Well, for example, if I just clicked on Pro there, okay? Now we can see the stop price that was Pro, right, up here. So if you're asking if it's displayed on the charts, yeah, we can see it up here. Now, if you're asking if we can show it as a column here, Deb, maybe. Let's take a peek here. And we can move stop price over if we wanted to see the value of the stop price. I'm sure it put it over here somewhere. I'd have to go dig it out. Yeah, there we go. So we can show you the stop price as a column. And of course, as we can see, S-Bucks blew through its stop area pretty quickly after that trade was put on there. And David, to your question, does Holly do options as well? Nope, just US stocks at this point in time. And yes, Gilbert, I will be sharing these windows with you guys. I've already got a little document prepared with all the links on it. So before we conclude today, I will drop all those links in there so that you will have access to these windows that we're going to be talking about here in just a second. All right, let's see, Bala, let's see. I'm just trying to make my questions panel big enough here. Now, when you're talking about educational material, could you be a little bit more specific and we can direct you to educational material if you're talking about the AI or something different? All right, just trying to get my window where I can read it here. Okay, so moving right along here. Previous days rippers. We're going to save that. We're going to do this. We're going to go ahead and just kind of segue into the sector maps with the attached CCs because I think what I'm about to show you here will make sense. And it was just the perfect day. It was the perfect setup. Number one, we had the large cap CCs extremely bullish, okay? After first 15 minutes, 61%, check box number one. And then this is what my compare count sector layout looked like after the first 15 minutes today, okay? So let's take a peek here. You know, different values. Not every sector was on fire to the upside. Of course, rising tide, you know, lifts all boats typically. But if we key on the ones that had a 60% or greater bullish count, like utilities right here, real estate, materials down here, consumer discretion, and healthcare. I believe there were 5 of these guys, and then technology. So 1, 2, 3, 4, 5. All right. So strong overall compare counts, then take a peek at all the different sectors that also had 60%. And let's take a peek at how those things fared after the first 15 minutes here. All right, so these are the ones on the list right here that we're going to be going over. These were all the ones that had a bullish compare count, 60% or higher. So XLU, here we are. Of course, this one ran a little bit on the first 15 minutes, but as you can see, first 15 minutes is over, orange arrow, and then we can see what XLU did for the rest of the day. So just playing the underlying ETF symbol here presented some pretty good opportunity. On the same token, when you're identifying these hotter sectors, you can easily, just pull one of the symbols. Bear with me here. As these ticks are occurring, notice we have the symbols scrolling through each respective, sector here. So it's always a good idea too to pop one of the symbols in there. So for example, on XLU, that's our utilities. So we could have easily taken any of these symbols that were coming through at the time, like ATO, and see if we can identify any laggers as well. Once we get a symbol from the sector in there, all we have to do is click on similar, okay? So after that first 15 minutes, if you notice any that are lagging that look somewhat strong on the charts, you could just play blind luck and all the ones that were red there take a stab at it, but that doesn't necessarily mean that each and every one is going to go with the sector. There's always a few in a sector that are not cooperating. But of course, we'd want it to look decent on the chart, whether it's the intraday or the daily, whatever floats your boat there. So that's another factor that you can fold into this. Or just look at the straight up ETF itself. So definitely a nice opportunity just to get long the ETF on the XLU there. Also strong accounts in the real estate as well. After the first 15 minutes, here we are right here at the orange arrow, right here. And then a nice, nice strong finish for XLRE today. A little flat for most of the day, but move higher there at the close. XLK technology. Well, get off there. There we go. Okay. 5, 10, 15. Here's the mark right there with the orange arrow after the first 15 minutes, then a move higher, a little sideways action all day before a strong close as well in the technology sector. XLV as well. And once again, these were just all of the sectors with 60% bullish count or higher. Once again, XLV, 15-minute period right here. A little run up, a little flat action right here, but definitely some nice upward momentum before we got into the close there. Let me just give that a mute real quick. There we go. Lastly, XLY, consumer discretionary. Okay, nice little tell after the first 15 minutes, and then just a nice grind higher. Okay, so when you see those overall strong compare count metrics like we saw here today, and then we've got some nice potential on the daily there with what Steve was showing us, and popping out of that little range and getting above that 200-day moving average. Everything just kind of lined up. Then we go through, we look at the compare counts on the sectors and see which ones are strong as well. Now, it doesn't always have to be such a you know a big event here. Okay, and what I mean by big event is popped above the top of that range and just said kind of sayonara to the 200-day moving average. A lot of these, this type of action happens day in, day out. Doesn't necessarily have to be a special day as far as the technical aspects of the big indices as well. So just keep that in mind as you move forward, and I'll make sure that the link for the compare counts with the sector uh, top list are in there as well. All right, Deb, I see your question there. Where might you put a stop for a day trade in the strong ETFs? That's really just up to you. Typically, whatever you might use in your plan, if it's a 1R, 2R, whatever that you're going there for. I choose to take a blended approach. And what I mean by that is I'll pile into all the ETFs that I think have that upside momentum, and I'll pay more attention to the overall P&L, okay, of the combined basket. And if I feel it's to a good spot, um, I'll rotate out of that, using Brokerage Plus, but I'll count it as a basket trade and look at the overall P&L versus trying to micromanage each and every ETF. So hopefully that makes sense to you, Debbie. Okay, any questions about the sector compare counts or just the overall compare count windows in general before we cruise on to the next topic here? All right, so I think we have just enough time to get through this. And I got to tell you, I think the last office hours was what, way back on the 3rd? But this is only the second one, so a lot of time has passed in between. But one thing has held up, and that is the theory of the previous day's rippers. Could be we're being, symbols being brought to our attention on the first day that it gets crazy. A lot of the times these things have been active for 2 or 3 days. But the overall premise is, once something is in motion to such an extent, it's not just going to stop the next day. Not saying that it couldn't, it could, it's just not very probable. So we're dealing with things that are already in motion. They're doing, they've proven to have big ranges in the prior days, and typically you're having large volume accompany uh, those moves as well. Okay, so just to recap here, what am I doing when I'm talking about previous days rippers, and how am I making use of those? Well, it all starts with these two very simple top list here. Okay, and when I say simple, I mean really simple. All we have in here is a little bit of filtering, stocks between 3 and 300, had to have cranked out at least a couple 100,000 shares. And then all we're doing is we're sorting any stock that meets that filter criteria by change from open, okay? Not change from close, because we don't care if something gapped up, all right? We want to see things that have really gotten up and boogied to the upside or the downside since the open. You can see how the list looks right here at the close. But as of the close Friday, if we take a peek at my symbol list here, There we go. This one's down here at the bottom. I just call it previous day's rippers because I'm always editing it at the close or right before the close to pile in the new symbols from today to watch for tomorrow. So as of the close Friday, I had 58 symbols in here, half from negative change from close, half of them were from positive change from close. And then that's when we bring in these two alert windows right here, previous day's rippers, PDR hitting high, PDR hitting low. And these windows are each pointed to that custom list. If we come in here and take a peek, you'll see down here, they're only watching previous day's rippers. So to compare, my regular turbo up, turbo down alert windows over here, I mean, they're pumping out so many symbols that it's real easy to miss a quality setup because the things are moving so fast. So the advantage that we have here is we're reducing our universe down to, it's going to be a personal preference for you guys. I tend to stick to 50-ish, 60-ish symbols from the prior day because I can keep up with that pretty well. But that is the simple technique. And I'm gonna kind of walk through that process before we're done here, just to show you guys how I can do it or do it in real time for you using today's symbol list from these top lists just by backtracking and looking at the history about 5 minutes before the close. But before we get into that, let's just take a look at some of the plays that these two windows right here produced today. All right, and a couple of these were already on my radar from last week, like Robinhood, uh, you know, reporting earnings, dipping down below 10, and then getting back into play again. So let me show you some of the things that came through here. What I'll also say about this too is it's enabled me to get into trades earlier, closer to the close, without really having to worry too much about, getting throttled, okay? And that is the allure of trading in the first 5 minutes. You can get in early on something that's going to trend all day, but you can also get steamrolled pretty quick if you don't know where your out is. And so by keeping the pre-market range up, well, let me just show you a picture instead of talking about it only. Okay, BBBY, Bed Bath & Beyond. Stock's been in play for a while. Here we have the pre-market range. Notice the nice definable pre-market range that had taken place before the opening candle here, the first 5-minute opening candle here. All right, so BBBBY came through shortly after the open. So all I have to do here is go, man, that looks really good. I can see my downside is clearly defined here. So even though it is the first candle of the day and I don't really have anything to, no pattern to pay attention to, like if I was hunting a traditional opening range break, I'd have to wait for something to develop. But I can use the pre-market range for that same reason and go, okay, BBBY could get hot on the day. I can easily take a stab 5 minutes into the open and my risk is clearly defined, being the lower end of the pre-market range there, okay? So that's what I mean when I say it can help take, the guesswork out of some of these trades and get into them a lot earlier than you would if you had to wait for a regular pattern to evolve during the regular session. So not a bad entry signal or a bad alert from BBY around 15, around 1563, I believe is when that pre-market range was hit or upper end was broken. And then we get a nice move in BBBY all the way through 17 and change there, okay? If I was, waiting for a regular opening range break, I mean, technically, we'd be looking at this level up here. So this allowing us, and it's not even really that definable, it's not that pretty, but this part is, okay? So we can use this to define our risk, that pre-market range, the low of it. So a really nice opportunity produced in triple BY today. Without further ado, we had pretty much a similar setup in Hood 1, 2, 3, 4. It took about 20 minutes to get up here and tickle this upper end of the range there in the pre-market, but a nice signal nonetheless around the 1270 level. And we got all the way up to 1450-ish on hood today, okay? And of course, Thursday, we had earnings. Friday, the buyers started coming back in, and then it looks like a little continuation here. So Robinhood definitely back above that $10 level. Everybody was getting a little bit nervous there, I guess, over at Robinhood management, but yeah, it looks like Robinhood is out of the doldrums for now. But once again, just clearly defined, if we had been wrong, if we would have been wrong on this trade, this would have been our stop level right here. Of course, it's also interesting, take note, before we got the signal of the break above, we came down here and popped that pre-market range, and notice how the candle closed right there, wicked right up above it. So especially when you see this type of activity and we come back up here and pop that top of the pre-market range, we know the sellers couldn't really maintain control, and that first little dipsy doodle there, nice wick, gives us more confidence to take that trade on the long side once that upper region was broken there. That's great to hear, Richard. I'm glad to hear that. I mean, the cool thing about what we're seeing right here is just the simplicity of it, okay? If the pre-market range is there and it was pretty active, we've got a nice definable range. We can easily identify our risk, and they're not all going to work, but the risk is clearly definable, and we always have to have a plan, right? Have a plan, stick to the rules, let the cards fall where they may. But I'm glad to hear that. Let's see, Gilbert, there. Should you use 20 period, 50 period, 30 period SMA? You know, it's really your personal preference, okay? On the intraday, as well as the daily, since I've been exposed to that by, thanks to Steve, I'm kind of partial to the 10 period, but once again, if you're holding hood from a swing trade, we get a nice little close above that 10 period right here, first day reclamation after being underwater for a very long time. Now, if you're talking about this trade from today, once the trade is in motion, you'll notice the 5 period, or excuse me, the 10 period on the 5 worked pretty well today too. If we were to go over here and look at the 15-minute period, then, well above it for the majority of the move today. Got a little bit bleedy at the close, reclaimed it at the end there. But if you're getting into a trade pretty early like this, the same moving averages that you typically pay attention to, I'd say use those, because I mean, look how elevated we were on that 10 period all day. Yeah, no harm in taking profits there, Richard. We're always going to leave a little bit on the table. Catherine is asking, what is the plan called? Well, that's a good question. I'm calling this list building technique previous days rippers, right? But you could just say it's all based around what we're seeing in the pre-market. Now, that doesn't necessarily mean that some of these things will not set up later in the day, but the whole premise here is being able to key off of the pre-market and get into these things a little bit early, because a lot of the times that first 15-minute move is the majority of the move, not always, but it just gives us a way to participate and not have to worry about getting our legs ripped off too early by getting involved in that first 5-minute period, having a clearly definable risk area there. All right, TGTX was another decent one. Same old song and dance here. We have the nice pre-market area right here. This one coming right in the first 5 minutes as well. And you could say, even if you bought the top of that candle, this trade still worked pretty nicely. Of course, this one had been on my radar back from Friday too. Before Friday started, I was like, ooh, if we don't break that low, we could get back into this big red candle that it had the day before, and it got a little bit more. I got some of it Friday, and then it's continuing today. But once again, it's set up nicely today for an entry. Even if you weren't in it from the day before, sets up very nicely here from the 996 level, capitulates up around 1172. Once again, just clearly defined risk. If we had been wrong on this trade, stop loss is clearly definable right down here. Do you plan on trading around entering after the open, or are there times when you enter pre-market? Well, keep in mind, these alert windows right here, they're going to be barking pre-market if things are moving, because I've got not only new low and new high in the other one, but pre-market lows as well. So for example, TGTX, I was getting hits, at about 2.5 hours before the open as this thing started moving around, okay? So getting a hit on this one is a pre-market high, definitely tells us, hey, this one might be in play. So by the time that the pre-market period is ended, we've got this nice little range. A lot of the times they'll put in a higher low, but they'll stay pretty sporadic. You won't see a defining range in the pre-market as you did in TGTX. Sometimes they'll just print once and stop. So I was getting ticks on this one way early in the pre-market. That gives me a little bit better of a an idea. Hey, might want to keep an eye on TGTX right before the open because it could shape up nicely. So you will get ticks in the pre-market if these things are making highs. I think even Robinhood, yeah, even Robinhood, we were getting plenty of alerts in the pre-market area. Yeah, there we go. So, once you start seeing them tick, they're on your radar. Once we draw closer to the open, if we've got these clearly defined areas there, makes your decision easy once the regular session begins. So TGTX was a decent one, and this one was a real beauty as well. PRVB. Let's see if my pre-market, yeah, we were getting pre-market action. See, I'm just clicking my pre-market alerts down here. So, you get this in the pre-market, you're like, ooh, if this continues like this, it's going to be a nice candidate. And sure enough, look what happened. Probably one of the tighter pre-market ranges. We have the first candle right here on the open, and then boom, off to the races. Once again, what I really like about these is the clearly defined risk levels, okay? Sure, you're trading in the first 5 minutes, but you got a plan, okay? If you were trading something like this that didn't have this beautiful pre-market range, well then, you'd have to look to the daily or whatever, but this is gonna be our safety net, right? Clearly defined, penetration of that, and off to the races. So what do we got there? Around 428, and this little guy topped out around the 560 level. So just a nice clean move with clearly defined risk levels. Once again, 15 period, or excuse me, the 10 period, pretty much ruling the roost for most of the day there. Do you have Holly on the pre-market? Well, Holly does not fire in the pre-market, only in the regular session there, Richard. Okay, so, obviously there were a lot more of these to the upside today, but that doesn't necessarily mean that there aren't going to be any good downside setups, okay? The interesting thing about the downside version of the PDR low today is it was pretty much being ruled by ETFs because of the market action. LabD was a perfect setup here, but then you're going to see a lot more ETFs that had this exact setup because LabD, not an equity, it's the S&P Biotech Bear 3X mover, okay? But hey, look what we got here in the pre-market. This is all that really matters, okay? That nice tight range and then an opening right here, very close to that range. So even though we were slightly outside of it, that candle opened at 46.49, pretty much the top of the candle. So once you saw that first print there and you realized what this thing was, even if you didn't, okay, based on just the simple chart pattern, what's happening, it's busting through that lower range. Could have easily taken a pop at it, gotten short, and our risk level is clearly definable at the top of that range right there. So almost an inverse pattern to the T of what we were seeing in the upside versions. And once again, there's that 10 period ruling the roost, but tapping it down most of the session. So we could go through a lot of these, LabD, SARC, all right, another ETF series trust, but this was like part and parcel for all these things today. They just kind of meandered around in the pre-market, and boy, when the open came, a crack below, they never looked back. So we could just keep going through these ad nauseum, and you're gonna see, not that great of a pre-market range there, but it's the same old song and dance, just over and over today. So sometimes that's going to happen. Obviously these things were some of the biggest movers on that prior day. So that's why we're seeing a lot of them in here, but it's just ETF after ETF after ETF with the same type of setup there, which, hey, there's nothing wrong with trading an ETF. All we're concerned about predominantly is that price action. Is it going to move in the direction that we hope it does? Okay, so real quick here, make sure we got time. Yeah, we do. Let's go ahead and just kind of walk through the process here of how I would update my my symbol list. So, whoop, I don't want to grab you. I want to grab you. What I do is I just kind of eyeball it and I take them up about that high, because I'd rather have a few too many than not enough to look at there. Get out of my way there, Holly. Okay, so I just kind of do it like this. Now, we're looking at the list in real time, so what I'm going to do is, and why that keeps rolling back up on me. Okay, well, we'll just have to do it like this. Just make sure they're the same size. What we're going to do is go to time frame, just use historical data. Obviously, we're on today's date. And this is the way you can do it. Okay, what did the list look like 5 minutes before the close? Of course, market closes at 3 where I am. Okay, so if you forget to do it 5, 10, 15 minutes before the close, you can easily just do what I did right there. So what I'm going to do is I'm just going to take the downside first, things move down the most. Once I get it highlighted, I hit Control C. I'm going to come over here to my symbol list. There's my previous day's rippers, edit. First, we got to blank it out, right click, select all. To hit backspace, gets rid of it for you. Hit Control V. Now we've got one half of the list built. Now we just grab the other half, all the way down, Control C. Get to the bottom of my list, give it the old carriage return, Control V. Huh, that didn't work on that one. Hold on. I might hit the wrong key over here. Control C. And Control V. Now, there we go. Okay, now I've got 74, a little bit more than normal, but that's okay. 74 symbols coming through 2 alert windows should be pretty manageable. All right, so that's how you would edit your list. Easiest way is just what I showed you guys right there. So now let me make sure I dump all these windows into the chat panel for you. All right, so here they come. So you should have negative change from close, top list, positive change from close, top list. The PDR, previous day's rippers, high of day alert window, low of day alert window, which you will point your list to. And then I've also thrown in the sectors with the CCs attached. All right, so I'm just gonna catch up on questions here. We're just popping up to the top of the hour, so we're almost done. Yeah, yep, lots of ETFs coming through there, Debbie. Yep. Lebu, let's see. Dave. Yeah, there you go. And like I said, a lot of ETFs in there because those were the things that were getting pummeled on, pummeled or going up last Friday. And lastly, let's see, Chris, you had a question there. What'd you have? Right, Chris. So all those links have now been dumped into the chat panel there, so they should all be there. All right, ladies and gents, I hope you guys enjoyed it. Once again, some simple techniques that are very applicable right there close to the open. So thanks for listening, everybody. Scott, if you're ready to walk us on out and let everybody know what's coming up as far as the test drive and any discount coupons that might be available, we're ready for you.
Yeah, let's start off by mentioning the test drive. That's going to start on Valentine's Day, February 14th. It runs for 2 weeks. It runs until the 28th because President's Day does happen in the middle of that and the market's closed. So you do still get a full 2 weeks. Go to tradeIdeas.com/test drive to learn a little bit more and sign up. It's $11.11, and you get to try all the premium features for 2 weeks. It will not start any kind of new subscription. So it's a great way to try out all the premium features if you don't already have access to them, and then make your decision. There's a good ebook that we've released this year, My Favorite Strategy Indicators. It's written by Dave Mabe, our Director of Software Development. Just go to tradeIdeas.com/strategy. It's free. It'll get delivered to your email. Interactive Brokerage works with us on providing great connectivity. They have one of the best short books in the market and a very reliable broker. Go to trade-ideas.com/IDKR to learn more. Stock racing is something we just released. I know we've been talking about it a little bit. You can learn some more and watch some videos at trade-ideas.com/stockrace. There's a nice video all the way at the bottom of the page that shows you how to do it if you download the beta. E-Trade provides great $0 commission trading and integrates with Brokerage Plus, just like Interactive Brokerage does. And you go to trade-ideas.com/eTrade to learn some more about getting zero commission trading through Trade Ideas and eTrade. Connect your Brokerage Plus platform directly. The code HAPPY2022 is going to expire soon because we're entering February. So if you want to start a subscription and get 15% off your first month or year of Trade Ideas, go ahead and make use of that before we swap it out for a February code. And if you have any questions, email us info@tradeideas.com. That'll go to our help desk. And find us on YouTube, youtube.com/tradeideas. Jamie's on Twitter @QuantBot. Steve's at TISteveG. We've also got @TradeIdeas and some other handles you can find if you poke around. And Trade Ideas Pro is our Facebook handle. So I'm gonna get the recording of this up later on tonight or tomorrow, and you get an email reminder tomorrow with a link to the playlist on our YouTube channel where you can find it. So thank you, Steve and Jamie. All have a good afternoon.
Thanks, everybody. Hope everybody has a nice green Tuesday. We'll see you next time.